Hello everyone, this is just another video on planetary stock trading. Uh, we are dealing with the earnings report. Now this is a technique, the earnings surprise method. This is a technique I found in one of Bill Meridian's books called Planetary Stock Trading. What we are basically trying to predict if the earnings report is the public's reaction to the earnings report, if the stock will go up or down. Now, in my opinion, there are some flaws to this technique, but it can work, but it's not very reliable, and I will demonstrate to you right now. Now, the main example here is one I experimented with analog devices. Now this stock, I monitored this stock very closely on its earnings day, and it reported earnings before the market opened. It's on the 16th of February this year. So I checked my transits and found Jupiter on the midheaven. Jupiter is in conjunction with Venus. I believe the previous earnings report was also positive, so before market open. But look, now in the aftermarket and before the market opened, I monitored the stock. The earnings report was positive, but the stock didn't. There was no gap here, as you can see. Let's look at the daily here. Look. So if you wanted to get in on this trade, you would, before the market opened, so on the 15th of February, preferably before the market closes, before 5 minutes, you would place your trade, and you would wait until the next morning to see if there's a gap. What you're basically doing is that you're expecting a lot of people in the after market hours to push the stock up, which is actually what happened, and I monitored it closely. But exactly 2 seconds before the market opened, this stock dropped 3 points, and 1 second before the market opened, it actually gained another 3 points. After market hours, I believe the peak was it was up 6.5 points, 7 points, something like that. So if you had like if you bought $600 or 600 shares, 600 shares, and the stock goes up 6 points, you would make $3,600. Not bad, but in this case, what the bad is that there is no gap, and the earnings report was positive, and we have the positive configurations from the planets. In fact, the stock actually pulls back a bit, and then it goes back up for the entire day. We can't predict what the market is going to do for an entire day. It could the market could open and the stock could actually go down. So that's the main flaw of this technique, is that you're betting on the aftermarket hours for a gap to happen, and if no gap happens, you don't get any money, or if the gap or if the stock gets sold and your analysis is not correct, you actually end up losing money, and who knows how much you lose if you bet a lot. Now, one other thing we can look at is O'Reilly Automotive, which actually this worked a bit, because the stock did actually gap. Look here at the previous earnings, and they announced earnings after the market closed. So it's here, the market closes, they announce earnings, and the stock jumps, and it jumps about 3 points. 4 points, something like that. So 3-4 points. So if you had, I don't know, if you buy 1,000 shares, you make $4,000 off that jump. And of course, if the stock goes down 4 points, you end up losing 4,000. And I'm not sure everyone would like to risk that much. Sometimes what ends up happening is you get a positive configuration, like what happens here in Shake Shack. You get a positive configuration here. This actually is they end up losing, but there's a positive configuration. Jupiter opposes the midheaven in converse transits. Converse transits. Jupiter is on the midheaven, it doesn't oppose it. There's not a lot of supporting aspects, or was there? Let me check. So we have here Jupiter on the midheaven, and this Jupiter on the midheaven ends up pushing the stock up after the stock gaps down. Seen you have Jupiter on Mars for Shake Shack, Venus. See, not very powerful configurations for a win. Of course, you need to factor a lot of fundamental stuff, but the Jupiter on the midheaven in converse transits justifies a push up in the price of the stock. And here we have something that actually worked. See, this is not very accurate because here with Uber, the stock opens lower but then goes up and pushes all the way back down. So it's not a very reliable technique, although it has some power to it. If you study a lot of examples, it does work. There is something that works in it, but it's not very reliable. I mean, it's not something I would bet any money on, unless you wanted to gamble your money. So I wouldn't use this technique. Maybe there are other aspects that need to be studied, but I think it can work for if you use technical analysis. If you're good with that, I think you can combine technical analysis and maybe some swing trading. Like if you hold the stock over a period of a few weeks or a couple of days with the swing trading, and you have a positive configuration astrologically and then a positive earnings report which you expect, you could make some money that way. But other than that, just using the day, it's not very reliable.